Hello, good morning from where you're watching or listening this podcast from. My name is Nick and welcome to another episode of the TechTrends Podcast. And today we are talking about a very, very interesting topic, which if you've been following our coverage, across Africa, payments, fintech, cross-border payments is one of the biggest conversations we've always covered. And of course, if you followed our work before, including attending events like the Africa Tech Summit, for example, we've spoken to a lot of leaders, from across payments in Africa. And of course, we can't talk to all of them. And I think that's why this episode is very, very interesting, because when you look at Africa, the fintech sector, just underwent what I call a wave of consolidation from a lot of, startups across Africa. Meanwhile, one company, has been working and doing something very interesting. More than 20 billion US dollars moving across borders, and this company is behind that. That's the real figure, Mark.
It really is.
Yes. So let's just start by you introducing yourself and telling us, what you do and your role at Verto.
No problem. Thank you for having me. My name is Mwaniki. I am the commercial director at Verto, where I currently operate or lead the commercial arm of the business in East Africa, covering Kenya, Uganda, and Tanzania. My background has been in the fintech space of about 12 years now, where I started predominantly in traditional finance, doing more of consumer lending. However, about 4 years into my career, I jumped into the tech side of finance, which is, of course, the fintech space, where I've had the privilege to work for a number of companies, global companies based here in Kenya, in different sectors from BNPL, from open banking, from cross-border payments, as well as trade finance.
Okay. Yes. Okay. I like that you spoke about, cross-border payment, and that's when I was just doing my notes. We want to address a few things. What is changing, what's still broken, and of course, what it means for businesses trying to just trade across, the continent, Mark. So welcome to the podcast.
Thank you very much, and thanks for having me.
Is it your first time sitting in such a setting for a pod?
Definitely, it is. But anyway, there's a first time for everything.
Okay, yes. First time for everything. Yeah. So let's start with just the big picture, the big picture shift that is happening across the continent. So as I said, we've seen the sector entering into a new era of consolidation. Of course, a lot of interesting, news or stories that we cover ourselves coming up from a lot of startups, fintech startups across Africa. What do these developments actually just tell us about where the industry is headed?
I think over the last couple of years, from where I sit, there has been lots of change, lots of innovation. I think the industry right now, where we are in 2026, 10 years ago, we were not where we are at this point.
Yeah.
And even if you look further, another 10 years from 2016, that is when the likes of M-Pesa was building up its footprint in Kenya.
Yeah.
So I think what that shows is that lots of businesses that have been in this space or are coming up are building to innovate, because a business's needs today definitely might change in 3 to 5 years' time based on how they're scaling or how they're expanding. Yeah. So that's why we are seeing a lot of innovation coming into the market. A lot of players even globally coming into the African market, because I'm very bullish on saying Africa is where opportunity is.
Yeah.
So that's why we are seeing a lot of players coming in with concepts that we might not have had before. One of those give or take like BNPL that is still picking up, or even open banking that is still picking up on our continent. Yeah.
I like that, building to innovate, because one thing we've seen even now banks starting to become fintechs.
Exactly. Yeah. Or acquiring fintechs.
Yes, exactly. Yeah. So I think that's not going to stop. And even just as you look at it, as this platform just become more integrated, are we seeing enterprises just benefit from one-stop financial ecosystem, or is there still a place for now specialist providers like you?
I would answer that in two ways. Yes, a one-stop shop does work in some instances. So give or take, maybe if we look at SMEs, a small business would benefit much more better or much more simpler if they had one financial solution that covers all their needs. However, of course, as they scale or as they grow, which now we see with enterprise businesses across the region, is they have multiple needs. They have operations in multiple countries as well. So, of course, how they operate in Kenya is not the same way they might set up in Uganda, based on regulatory landscape, etc. So we are seeing large enterprises seeking I wouldn't say multiple solutions, but different solutions to fit their particular needs in the particular markets that they're in. That is where now players like us come in. Yes.
Right, but on regulation, I think we've seen central banks across the region trying to be flexible. There's this, what would you call it? That is it Kenya and Rwanda? The
license passporting.
Yes. So we've seen that happening a lot. Maybe, that will see a lot of now this reduce that friction, the regulation friction that we had over the years, right?
Definitely. Yeah. And I think it's a very good initiative. In my opinion, I just hope it can move quicker in terms of more central banks in Africa coming on board, because we've seen how it works in Europe. For example, a business in one country that holds a payment license can easily operate in the other countries. And I think it's based on they have one standard of sort of due diligence of these businesses, so it makes it easier. But of course, in Africa, we're about 54 countries.
Yeah.
And all central banks have their own way of operating. If that could sort of start changing over time, of course, it won't happen overnight. If that can start changing over time, which we are seeing now, based on like the agreement between Kenya and Rwanda.
Yeah.
I know Rwanda have one as well with Ghana.
Oh, yeah.
So if that can continue, it would make innovation and expansion much more simpler. Because as a Kenyan business, if I hold a PSP license here, and I would like to expand into Rwanda, because based on my market research, my product actually has a use case or a strong fit in that market. I can acquire a license in a much simpler format, because both central banks speak. I think the biggest challenge is they don't talk.
Yeah, they don't speak the same language.
Exactly. That's the challenge.
Yeah. Okay, Mark, let's talk now about the real problem, and the real problem, that is payment versus treasury, which of course we just touched briefly. So, all of us, everyone just talks about digital payments, as if the hard part has actually been solved, right? Do you think, are we solving the real problem, and what are just the biggest challenges just businesses still face, when moving money across borders in Africa?
I think, to be honest, the infrastructure is there. There's lots of very good fintech players in the African continent. The infrastructure is there. I think the biggest challenge that I'm seeing from my point of view is sometimes particular products could be built without a particular use case in mind. So it's sort of you're building a product to take it to a new market because it's worked in market A. You assume it to automatically work in another market, which is not the case. But of course, that has changed in terms of lots of businesses doing their own market research, getting to understand the local market nuances, and then now building a product based on what is needed in this market.
Yeah.
Because give or take, for example, you look at Kenya right now, building an FX product isn't really the go-to at the moment. Our market has been stable to the dollar for quite a while, so ideally banks will dominate that space, guaranteed. However, if you look at, let's say, payments on certain corridors, Kenyan businesses that want to pay into the Middle East, they might have challenges with that. So what they need is maybe a rail or infrastructure that allows them to easily pay into such markets or collect money from such markets.
I think rails is, that conversation is always there. But again, as you said, I'm glad that we are trying to build the infrastructure to actually accommodate all these, and maybe as we just move forward in a couple of years, that will change. But again, payment and treasury, these are fundamentally totally different, right?
Correct.
Why does that distinction matter, even as more businesses just expand across Africa?
I think how I look at it is payments is a transaction. Treasury is more than that. Treasury encompasses cash flow. It encompasses foreign exchange. It encompasses how you actually strategically manage your funds. That is a distinct difference, because anyone can wake up and do a payment. But not anyone can, you can't just wake up and open a treasury desk, give or take. And that's what we are seeing with a lot of large enterprises in the market, where lots of them are really investing heavily in treasury management, because if you operate in multiple currencies, in multiple countries, and you make frequent cross-border payments, you definitely need to know predictability. If I'm sending money today to a certain country at this rate, it might take T+1, T+2, and by that time the rate might have changed. So how much will that person receive? So that is where now I'd say fintech players come in, because what, for example, like Verto does is we offer predictability, which is what a lot of businesses really need. They just want to know, can my money get there on time? How much will I be charged in FX fees? How much will I be charged in transaction fees? That is it. That's simply what a business would want in 3 simple things.
Especially transaction fees.
Especially transaction fees.
We always complain how some products are very expensive to use because of just transaction fees. You go through your statements, put those figures together, like
exactly.
this is a lot.
That's the thing. But unfortunately, if there are no options, one is forced to go that route.
Yeah.
But I mean, at least with Kenya or even Africa, we are glad to see lots of digital players in the market.
Yeah.
Which is good because it gives consumers the option. Yes.
Exactly,
You can be given 5 options, and if, for example, you want to send money to the US from Kenya, you have multiple options, and now you pick one based on your preference and one that fits your particular use case.
Okay.
Yeah.
Let's not talk about now just Verto's, own experience at scale, right? So you've processed more than 25 billion US dollars cross-border payments across multiple regulated markets. What lessons have you just learned helping just enterprises, in this market, just navigate Africa's payments landscape?
I think one of the biggest lessons over time has been trust is very important.
Yeah, I think in payments, trust has to be everything.
You're dealing with the funds, you're moving money. Trust is very important. And also getting to understand the exact needs of the customers in all the markets that you're in is very key. And I think for us, that is what we've been able to do in terms of building that infrastructure over the last 9 years that we have been in operation. We have also, learned that you must collaborate. Banks are there for a reason. We are not here to replace banks as fintechs. We are here to collaborate with banks. And even as you said earlier, that is why banks are becoming fintechs or acquiring fintechs. And we collaborate with them, and that's why we continue to strengthen our banking relationships in whatever markets that we operate in. Because at the end of the day, Verto is not a bank. Your funds do not sit with us. There is a custodian, and that custodian is a bank. So we collaborate with banks. The other thing is also regulators. I think we know expansion in Africa is one of the hardest because, getting a license in different markets, if you were to get a license in all 54 markets, I think that would take you very many years, give or take, unfortunately. But we have also realized that, when you sit down with the regulators, help them understand your product, help them understand what it's coming to solve in the market, you find the relationship much simpler or much easier in terms of you getting approvals to operate in different markets. And that is what we have continued to do, and we will continue to do even as we expand into different regions.
I like the idea of sitting down with the regulators because I remember, the previous central bank governor used to be very, very, you'll mention anything to do about crypto and like, no. this can't. But, as just you sat down with the players and they were like, okay, they started being flexible. So, sitting down with them really, really helps actually. And what we've seen is many businesses still deal with a lot of hidden, FX costs. Talking about settlement delays, you're talking about limited visibility. How then has just Verto just built its infrastructure to just differently to just address that?
I think before answering that, let's think about that in practicality. If you as a business owner wanted to send money to Nigeria, would you know how long it would take?
It's really hard to tell.
Exactly. And then also, would you know the path that money would take to be routed in terms of getting to the beneficiary?
I think my word would just be the other person wants to get my money. So
exactly. There's once I was at a conference once and I had an analogy of think about it like a plane. You can easily book a flight from JKIA directly to Lagos. However, if you want to send money from Kenya directly to Lagos, ideally through traditional means, that is not the way it would go. It would have multiple stops where, for example, it's a Kenya shilling that's routed into Europe, converted to the US dollar, then now rerouted to Lagos and converted to the Naira, which of course causes settlement delays where you don't have predictability, where you can't tell your supplier you're 100% sure the funds would arrive at a certain time. The other thing is the cost. Of course, with such payment rails, there are intermediary banks involved, and every intermediary bank charges something. And that's where now the transparency on fees comes in, because you're not in a position 100% to tell a client your funds are going to pass through, 3, 4, or 2 intermediary banks, and this is how much it'll be charged.
Yeah.
It's more of sort of like a wait and see kind of scenario. And those are some of the biggest pain points that we realized very early in our journey.
Yeah.
And build infrastructure around that to basically give you as the business owner comfortability in terms of knowing, I know my money would get there in T+0 or T+1.
Yeah.
The other is, I know I will be charged a flat fee of X amount. And the other thing is, I know exactly, what sort of route my money would take to get there, whether it's direct or it's being routed from another platform. But ideally, the main thing is also being able to just do a direct transaction from your currency to their currency. And I think that's something maybe we'll dive into a bit later that perhaps is essentially coming in to solve.
Okay.
Yeah.
Well, interesting. So, based on my research, so, Verto actually holds licenses across. So there's Kenya, Nigeria, South Africa, and the UK and the UAE.
Correct.
And of course, I know we spoke about this earlier, about trust, regulations. But again, how important is just regulatory capability in building that trust with multinational businesses?
I think it's fundamental. It's a fundamental thing because these multinationals have been in the game for very many years.
Yeah.
And for them, trust is very key.
Yeah.
So if you approach them, no matter how good your solution is, if you haven't checked all boxes from a compliance standpoint, you will lose out on that business, unfortunately.
Yeah.
So for us, we always want to be compliance first. Hence, that is why we would rather, go the route of getting to understand the market, acquire the correct approvals, and then go to market and sell to these multinationals. That way, when you're approaching, Coca-Cola or Netflix or of the likes, you basically are able to provide whatever documentations that they might need for due diligence. And it also just helps build the trust because once you've been able to pass due diligence for such a large multinational, it's sort of like a domino effect. As long as your product suits the rest, you're able to acquire.
Yeah. And the thing I've always picked, having written so much about payments and, policy and all these things, once you get the trust of a regulator, it makes things very easy for you.
Correct.
Yeah.
Correct. That's very true.
Okay. So let's just zoom in back to, back home here in Kenya. So, of course, we've seen, Kenya really positioning itself as a, a regional financial hub. In fact, I think yesterday there's an article I was doing around from a company called BCG, Boston Consulting, I think something. There is a report about how, Kenya and even Tanzania are the biggest financial markets in Africa. But what opportunities do you now see for especially Kenyan businesses that are trying to just expand across Africa and even global?
Yeah, I think as I had mentioned in terms of businesses building to innovate, I think a lot of businesses have also realized that your market is not only Kenya.
Yeah.
Whatever products or commodities you're selling can actually benefit consumers in different markets. And I think the biggest challenge is how do they get to those markets? Because in my role, I get to speak to lots of importers, exporters, manufacturers, small business owners over the years, and you get to hear, okay, yes, I got a buyer for my product in, for example, South Africa.
Yeah.
How do I get my products there? And if I get my products there, how will I be paid? I'm not an incorporated business in that jurisdiction.
Yeah.
I don't hold a bank account. So I think it's more of giving sort of like information or rather customer education to enable these businesses to understand that, yes, there are ways that you can trade in different markets and still get paid or pay people in different markets. And I think, to be honest, the Africa Free Trade Area Agreement covers that. Yeah. So the policy side of things, I believe, is at a decent level, if I may say. It's at a decent level. What now needs to be done is sort of like the grassroots customer education for these businesses to actually understand. Governments have put in place these policies. Yeah. This is what these policies actually mean for you. This is how you can actually operate and sell across borders. And then now, of course, in terms of payment infrastructure, that is where now players like us would need to collaborate with some of these trade agencies or trade bodies, just for us to also let people know that, as a Kenyan business, you can actually collect Naira without actually opening an account in Nigeria and easily convert that to your Kenya shilling and settle to whatever suppliers you need to settle.
Okay.
Yeah.
You talked about the Africa Trade Free Area. I think I always, I think I always say that's one of the best things to ever come out of Africa, actually. So we have, of course, initiatives like, PAPS as well. Again, Africa Free Trade Area that promise to actually transform just, the intra-Africa trade. How do these just public initiatives just, complement private sector innovation?
I think they work hand in hand, or rather they complement each other in the sense that, as I mentioned, their main job is, to go and speak to these regulatory bodies or trade agencies in different markets, have bilateral agreements, and set up the policies to open up borders. And then now for players in the private sector, most likely have built the financial infrastructure, the logistics infrastructure that now collaborates with the policy that has been done. And now that can be pushed out to business owners or manufacturers or etc. In different markets that would allow them now to know that I can send my goods to Zambia, I can be paid in kwacha, and I can convert that money to Kenya shillings. So I think they have to work hand in hand because, as we mentioned, these policies have been there for quite some time, to be honest. They've been there for quite some time. But also adoption is not picking up at the rate that I know the policymakers would have wanted. That is why I think we are at a place where these conversations need to be happening time and time again for private sector players to, put themselves out there as well and get to educate the policymakers as well so that, it gets to the grassroots of the business owner, the micro SME. Because I know a lot of... what matters to a lot of countries, of course, is from the grassroots level. Our micro businesses benefiting? Are they feeling? Are they feeling the effect of these policies we are making? Because of course, the enterprise level, 90% of the time, they will feel it immediately.
I know.
Yes, they are the beneficiaries from day one. But when you go lower the diagram, that is where now you actually need to see it start working for them.
But at least for enterprise, let's find a way to just navigate through and easily find a way. But when you look at the lower. It's always very hard. But again, when you look at these initiatives, actually, I think neither actually can succeed in isolation. So we spoke about, I believe the future of African payments depends on, of course, collaboration between, between regulators, financial institutions, fintechs, and even now policy makers. Really, that's what will actually make the sector really succeed, right? Now, let's talk about just, what sets Verto apart, right? I always say, let's make practical for just listening, sitting to, to you and to this podcast. If you're advising a CFO right now, choosing between several cross-border payments providers, what questions should they be asking before even deciding this is the play I'm going for?
Yeah, very, very, very good question. I'm not a CFO, however, from where I sit, the conversations I've had with the CFOs.
I know you've spoken to so many of them.
I think the biggest thing, and I'll go back to that, is predictability.
Yes.
Predictability in the sense of, number one, FX rates. Can I hold foreign currency and hedge on it? Can I, move money to a supplier tomorrow and know exactly how much I'm going to charge? What else? I think something else a CFO would also want to know is, the speed. How quick will it take? Because I think features are good. Features are nice to have. But when you look at it deep down, what a business really wants is, did payroll go out on time to all our consultants or employees in different markets? Was our supplier paid on time? I think those are the things that the CFO would always remember as opposed to the features point of a product. So it's more of just being able to, have certain SLAs in place and sticking by them. And I think the biggest challenge we've seen with traditional rails is that predictability was not there. So one is left to sort of just like sit and wait and hope that it gets there in time. Because, for example, a Kenyan business that would want to export products to the Netherlands, products can't get there today. However, this Kenyan business owner will be asking himself, when will I receive that money? The funds could be dispatched tomorrow. However, how soon will he receive that money? And I think for such businesses, it impacts their cash flow because those funds may be needed for expansion or to pay local suppliers or, to buy more products. So I think predictability for me is what I'd go back to when it comes to what a CFO would look for.
And even maybe things like just transparency with the FX rates and and all those things.
Exactly.
And fees. I think those are things that a lot of CFOs will ask. And now just, in this case, what sets now Verto apart in a market where, of course, we have so many fintechs across Africa, that are expanding just beyond payments into banking and financial services. What sets, Verto apart?
I think for Verto, one thing we got to understand and learn is we cannot build a one-size-fits-all. Yeah. Mm-hmm. So it's getting to understand what sort of segment of customers that we can actually build for. Mm-hmm. Not saying that we will not, we would not expand to others. Yeah. However, it's sort of like doing it in a tiered approach, where you master a particular segment, you move on. That is something that we've been doing time and time again, and we have seen the results based on how much we've been able to process over the years. The other thing is our compliance-first approach. Yeah. As I mentioned, for us, it's not about opening in a new market and, moving as much volume as possible. Mm-hmm. We want to make sure we're moving volumes in the right way, because at the end of the day, we seeked approval to, set camp in that market. Mm-hmm. And even based on our multiple entities, we are responsible to different regulatory bodies. Yeah. So we need to make sure that we have managed all our stakeholders in a way that we're able to operate, and our clients as well are happy. Mm-hmm. So we have a compliance-first approach that, we are also able to make sure that in every market we get into, we're getting in the right way. Mm-hmm. We are listening and doing our research to what is really needed in the market, and then structuring or tailor-making our product based on that. Okay. Yes.
Right. And of course, if you're in the space we are in the tech media space where where we operate in, innovation always gets so much attention for a lot of products. I mean, we go to events, cover these, and of course, feature X, feature Y. But I think what I've seen Verto doing is heavily investing in infrastructure, which I think is the key component, even as we move money across Africa, across borders. Why is reliable infrastructure just as important as new features?
I think infrastructure is important because, as I mentioned, all the policies could be in place with all the countries in our continent, for example. Yeah. However, if the infrastructure is not there, how will business A benefit, getting into different markets or expanding into different markets? So infrastructure is key, because if you're able to build, solutions that can do multiple things, and ideally fit particular businesses, it sets you apart, because, if you're able to tell a business that you can pay multiple suppliers globally, you can hold up to 49 currencies, and you can collect with multi-currency accounts in different markets. I think that is something that's very key. Because talking about features, one of the things that I really like about the products that we've built is a Kenyan business does not have to incorporate, for example, in South Africa or Nigeria or the US to hold a locally domiciled bank account in that particular country's currency. So I like to call it sometimes compliance as a service, where I'll tell the Kenyan business that you as a Kenyan registered business can hold a USD account with a US bank. And what that means for you is, if you're trading in the US and you're receiving a payment, that'll basically run through the local rails, which means less cost and quicker speed in terms of receiving the funds.
They don't have to open a USD account in the bank here.
Exactly. Or it doesn't have to take 24 hours for the money to get to you. Yeah. It's near instant.
One question I always fail not to ask any guest in the payment space who we host in this podcast is about stablecoins, because as I mentioned earlier, previously you will talk to the regulators about stablecoins, about crypto, like, no, we can't have that conversation. But we've seen even regulators being very flexible and now accommodating those conversations. Earlier we were just talking about how we now have the vast virtual assets bill already, up for Kenya. Is this a space where we see Verto actually getting in? And basically just your overall thoughts about that space.
Yeah, I'd say definitely. Stablecoins, how I look at it, if I was to give a scenario, is many years ago when, certain brands, times were changing, certain brands did not innovate.
Yes.
And they ended up being left out. And when you try and catch up, other players have come in and pretty much run with it. So you end up closing shop. So for stablecoins, I do see stablecoins as the future. Yeah. Because number one, it's a near instantaneous way of sending money literally to every corner of the earth. Yeah. And it is a space that we do see a lot of players coming to the market and demand growing. Yeah. I think the fact that now, for example, like Kenya, of course, with our virtual asset bill, that already is a step in the right direction. Yes, yeah. That means the regulators have warmed up and are opening up to these conversations. And I think the only way this would have worked is, or the way it's worked is because these private sector players, put themselves out there and educated the regulators, on what stable coins are, what benefits they could have towards an economy, etc. So it's a space that I see growing. Very, very, very curious and optimistic about it.
Yeah.
As times pass, I think the only question, question I'd say that I have is in terms of use cases. That is what we really need to see a lot more of, because it's going to be very hard to hear an enterprise business opening a stablecoin wallet and asking to be paid in stables. Maybe that can definitely happen in the future. Don't get me wrong, that can happen in the future. But for now, I think the biggest use cases we are seeing is where we as the payment infrastructure players collect currency in fiat. However, we're able to move the money across borders in stables and still settle in fiat.
Okay.
I wish, or I would like a future where yourself or I can walk into a supermarket with our stable coins and pay with our stables. So that is where I believe we will go in the future. But only time will tell in terms of how soon.
Okay. Yes. So that's a space you're really considering.
Definitely. That is a space we are considering, yes.
Okay. I love that you mentioned the vast big, because one thing I was reading about is it's interesting how we've seen a lot of African countries almost adopting the same bill. Actually, when you read the South African bill around virtual assets, it's almost similar to what Kenya has.
Exactly.
It's almost similar to what Rwanda has.
It's always. I think for central banks, as much as they don't talk, they do have a tendency of peeping at what the other has done and sort of copy pasting. So if more can do that in a much quicker period of time, the better.
Let's now just close by just looking forward, looking ahead. Over the next 5 years, what role do you see, 5 or even more? What role do you just see Verto just playing in just shaping the future of African trade and just enterprise payments?
For Verto, I see us continuing on our path of refining and building our infrastructure. I think we have seen what that has done for multiple businesses across different markets over the years. So this is something we definitely will continue, because we do know businesses will continue to come up, will continue to innovate, needs will continue to change or increase, and we want to have the infrastructure in place, given at that point in time, to basically ensure that we can serve the particular businesses that come into our ecosystem with whatever sort of products that they might require. Yes.
All right. And now, if you are talking to, if you could leave just, business leaders with one message about the future of cross-border payments in Africa, what would that be?
Future of cross-border payments.
Yes,
in my view, would be a future where I can wake up today, similarly to what we can do right now, for example. If you wanted 1,000 shillings, I can easily just take out my phone, send it on M-Pesa or even via bank through PesaLink, and you'll receive the money instantly.
Looks like you are getting some money. But
that is sort of like the future I would want to envision for cross-border payments in Africa, where a trader in Zambia can easily pay, their supplier in Egypt, or a trader in Kenya can easily collect money from someone in the UAE, etc., or even inter-Africa. Because I think for me, inter-Africa is something that is very key, because if we can be able to trade amongst ourselves properly, I think the growth of our continent can surpass others.
Yes. I love that, trading, among ourselves. That's why we need a visa-free.
Exactly.
Yes, Yusuf, we need that to happen. It's always one thing I really pray that happens. But Mark Mwaniki, Country Director for Kenya at Verto, thank you so much for joining us on this episode of the TechTrends Podcast. Of course, we look forward to discussing more on this, and maybe just plan a separate episode just to see what more we are building and what more we should expect, for you. So thank you so much. Any closing remarks?
Thank you very much for having me. It's been a pleasure. And I think for me, all I'll say is Africa is the future. So we must build for our continent. Yes.
Yes, we must build for our continent. I think that's the conversation we'll keep having. And of course, we'll keep bringing players in different spaces, just talk how do we build for Africa. Thank you so much for watching this episode of the TechTrends Podcast, recording live from Wojo in Upper Hill, Nairobi, Kenya. We'll see you in the next episode.